From our Stars and Dogs segment, it's time for this week's Dog. Market darling, Tesla Inc., TSLA on the Nasdaq. And Aaron, I'm going to let you take away our dog.
Yeah, Tesla, dog of the week, quite surprisingly, actually. So everybody knows Tesla, the world's #1 maker of electric cars, so no need for an introduction. And the stock has been on a tear since the start of the year, but it hit a bump in the road last week, sending the share price down nearly 20%. So what happened? Well, one issue was that the company missed expectations on vehicle deliveries in Q2. They delivered 22,000 vehicles compared to 25,000 in the same quarter last year, and slightly below analyst consensus of 23,500. So not a big miss, but still a miss for a company that has been widely touted. Tesla blamed severe production shortfall of its battery packs and said that the production averaged 40% below demand until early June. But they say that the issues have now been resolved and that production is back at full speed going forward, so they don't foresee any issues. But analysts at Goldman Sachs, they don't seem convinced. Goldman issued a report. They reduced their 6-month price target on Tesla to $180 from $190, and for that they cited plateauing sales of the company's existing Model S vehicle, and they also believe that the company is going to have trouble hitting its production targets for the year. So they have a sell rating on the stock. Tesla's trading right now at over $300, about $330 per share. Their price target, $180. So you're looking at about a 50% decline in the company's share price, according to Goldman, over the next 6 months. I also believe there's some other things at play as well. One of those is concerns over competition that may be weighing on the stock. No secret, all the other car makers are investing heavily in their own electric vehicles. And just last week, Volvo announced that it was going to be converting its production to all electric vehicles by 2019 and afterwards. So no non-electric vehicles from Volvo as of 2019. In my personal experience, I think Tesla's got a great product. I was shopping for a car myself about 9 months ago, and I did a lot of research on electric vehicles. So at the time, the stats on Tesla with respect to the driving range and the charging time, they really blew away all the other options that I saw. So I was really impressed. So there is a real competitive advantage there with the company, and but it is going to be facing more and more competition going forward, and I'm sure that is going to concern investors. So over the last year, as I said, Tesla has been anything but a dog. Although it's down almost 20% last week, it's still up after that decline 45% since the start of the year. Looking at the company financially, which is what we always do, we're not looking at the company's story necessarily. We love a good story, but the numbers have to support that story. The numbers to us do not support the story yet. The company continues to burn through cash. It's only had a single quarter of profitability in its history. That was Q3 of last year. They squeaked out about an $80 million operating profit. But they're continuing to lose in the last quarter, which was fully reported quarter, which was Q1. They lost about $250 million. And that's typically what I see in terms of net operating loss from the company on a quarterly basis, about $250 million per quarter. So this is not a company that would pass our investment criteria.